Hello, this is John Kvale, and for you folks that are regular viewers, you will notice that I got my money's worth on this haircut. Some might even say that I'm cheating the wind, but I digress. So I'm wanted to run through the Q4 newsletter and give you our thoughts, and those longtime listeners will also get a kick out of viewers will get a kick out of maybe if I can make this thing work appropriately. So 3, 2, 1, here we go. Oh, it worked. Good. Okay, here we are. Those people that are just listening, I am on the first page of the newsletter, and I wanted to run through a couple of thoughts that we did. And the very first thing that pops up is our Perot Museum announcement reminder. It's an odd date due to expenses and just popularity. So it's a little bit early in the season. We're going to be the first ones there in true financial planning format. We'll be the first holiday party, but we hope you can make it. It's Thursday, November 14th from 6:30 to 9, and we do have the whole museum. Okay, a couple of things that I wanted to talk about, and I'm going to bounce back and forth here, are kind of our main two articles. Just so you know, the way we write these newsletters is our publisher / editor feeds these the main articles as close as she can to the first page, so you can always tell what our main article is. And this time it's the home mortgage and our trade war. So with it, and I'm going to bounce to page 2 here. Hopefully, let's see if I can bounce to page 2. Is it time to refinance the mortgage? Lower rates, we've got lower interest rates. This dynamite chart, for those of you that are listening, there's a really cool chart that I found out of JP Morgan, and it basically shows the longer term interest rates, and it compares the United States to everybody else. And essentially what it's showing is that the United States long-term interest rates are much higher than pretty much everybody else's. And that's giving us some downward pressure as people move across the pond or wherever they go to try and get a higher interest rate. So said another way, people are buying our bonds, pushing our interest rates down because in their home country, they have even lower rates. What is a possible effect of that is making our mortgage rates lower. Now, oddly enough, right after I pinned this article, rates did pop up a little bit, and it's related to what we'll talk about here in the second time, and that is the tariff talks. But I go through a whole bunch of items to think about. I did a blog post on this, but not as in quite the such details. But the main thing I'd like for you to remember when you refinance, the difference between your old payment and your new payment, we'd like to be able to pay those costs off in 18 months. Everything else is thoughts that the deductibility of costs, teasers, rates, things of that nature. Everything else is more of a reminder. But this is kind of an interesting thing that we think about. We'd like for it to pay off in 18, and shorter than 18 months is even better as well. Okay, I'm going to pop back those listeners. I'm going to pop back to page 1. And basically the second main article per se of our newsletter is tariff talk. So I've got to jump from here to page 4. So I'm back on the first page. And now those of you that are listening, I've jumped to the 4th page. And going back to what I just talked about a minute ago, the market sometimes seems bipolar. It's real, everything's great, and then everything's negative, everything's great, everything's negative. And it's a lot of it is geared around the tariff talk. And I found this neat graph. What does this thing keep? Oh, this is I found this neat graph. I was looking at what keeps popping up on my cursor for those of you that are just listening. The tariff talks have been around, and we've had trade wars, tariff talks for decades, actually centuries. This thing's going to get figured out, and when it does, what's going to happen is we'll have some sort of reacceleration. And that's what happened to interest rates, as I mentioned about the mortgage rates just earlier. What happened was some very positive feedback came out. Interest rates moved up in anticipation of faster growth. So what we can conclude is, and this is another chart of the 10-year, once we get through these tariff talks, we're likely going to see some sort of a reacceleration. We still do think that because of the inverted yield curve, we will have some sort of recession. But the immediate reaction would be some sort of acceleration. Okay, now enough of that. I'm going to go back to page 1. Those of you that are listening, and we're back on the first page. And now I'm scrolling to the second page, And then I'm going to the third page, not our main article as it didn't feed off the front. Don't forget a much forgotten personal tax, and it's associated with that. I put this in there because of the refinancing and talking about mortgages. Did a little analysis mid-quarter, and it wasn't a surprise. I was actually interested to see how it would turn out, but it wasn't a surprise. Property values have gone up an average of about, let's see, I'm looking here. The property values have gone up a little over 3.5% since '87, and that's just inflation adjustment. But our average tax increase is almost 5%. Why is that important? Well, property taxes and all of our personal taxes are going up faster than the growth. So what's the bottom line theme here? Don't forget about property taxes as an expense. Okay, now going past, those of you that are listening, I'm going past number 4. Page 4, I'm on to page 5. These are gentle reminders, required minimum distribution. If you're within this, those of you again that are listening, I'm on page 5, and these are end of the year tax reminders that you must make a decision on. Okay, if your date of birth is between 7/1/48 and 6/30/49, that means that it's your first year that you have to take your required minimum distribution. You can defer that. If you defer that, you will end up with 2 distributions in the next year. So make sure that doesn't mess you up. Also, charitable donations, you got to make those the year of. 401k and company plans, you've got to make those the year of. Make sure that if you do have a catch-up provision in your 401k, we're reaching out and reminding some folks, but make sure that they're allowing you to do that, especially if you just turned 50. 529 distributions or contributions, we need to make those the year of. So I'll have another article about things that we can reach back next year into this year, but these are all things that have a hard deadline. So, okay, those of you that are listening, I am now moving to page 6, and we pulled out the 3 most important Social Security, most talked about, most important, and the meat of our Social Security program review. It's up to 15 parts, and I've got a few more and we'll be finished. We're super excited. Sorry it went so long. We did this thing in April, and here we are in October still doing it. We wait till the summer and it bled over, but these are the 3 big ones, and basically it's Social Security benefits for retirees that have living spouses and deceased spouses. Those are the tricky parts. So those are the ones that are, and then the third is for divorced spouses. Those of you that are listening, I'm going to page 7. And I always do this parting thoughts. I have fun with it. We're happy. It's our 24th year to do the Perot Museum. And also, I'm going to tease this a little bit. We have some super news, but I cannot tell you yet. We're bound by restrictions. Hint, hint. Those of you that are basically in the know probably have figured this out. Okay, going back to page 1, here we are. Thank you for your time. I tried to go through this fast, but in the essence of time, but I also want to give you what we were thinking and why we do this. I hope you enjoy, and we thank everybody for taking the time to listen, watch, review this, and you'll see it on the post. Thanks so much. Have a great day. We'll talk to you in 2020.